to have this very eminent panel with me, Trevor, team, Edward, and of course Miriam. So for majority of us and for majority of the people in the audience in the world, blockchain is no longer this very obscure sport in the internet, but it is now becoming a real global currency. But before we dived into what this industry has become on whatever is happening in the space, I'd give pretty much every single person a couple of minutes just to introduce themselves and what their company does. Can start with you, Edward.
Hello everyone, I'm Ed Ibekwe, Sales Manager at ChainUp. We're a leading blockchain technology provider, and we're committed to helping businesses in Africa and empowering them to with secure and innovative solutions. Since our founding in Singapore back in 2017, we've been helping businesses navigate the complex landscape that is digital finance, and we're able to do this through a comprehensive suite of products, from exchange technology to custody and wallet solutions, KYT solutions for compliance, exchange liquidity, and a host of other infrastructures that we provide. Currently, we have over 1,000 clients across 30 countries globally, and we're able to reach over 60 million end users. And we have a strong focus on security and regulatory compliance. To that end, we have 5 international security accreditations. And last year, we were awarded Best Institutional Custody and Asset Servicing Solution. Thank you.
Miriam?
Okay. My name is Miriam Kiwan. I'm the Vice President for Circle Middle East and Africa. For those who are not familiar with Circle, we are a global fintech company that sits at the heart of digital currencies and open finance infrastructure. We basically bridge the gap between the traditional financial system and the Web3 economy, and the way we do this is by issuing regulated stablecoins. USDC is perhaps what we're known for as a company, which is the world's largest regulated stablecoin, and has facilitated over $13 trillion in transactions and is currently available in about 190 countries. What makes Circle different from probably other providers out there is our laser-focused attitude towards regulation, transparency, and management of transparent reserves in a way. And we also benefit from global partners that really enable us to build the stablecoin network together with our Web3 services as well that support sort of this global ecosystem.
Tim?
Hi, sorry, I'm Tim. I'm the Group CFO at a company called Zone. We are a decentralized payment network powered by blockchain. We have started our operations in Nigeria, where we have a central bank license to act as a switch. We got that license back in 2022 and have been operational since that time. We've been building our network and building the blockchain before that in terms of our use cases, but since 2022 we've been operational as a regulated switch. We speak about the fact that our blockchain is a regulated blockchain. We very much work in hand with the regulators and see our role in the ecosystem as being that bridge between the current financial system that is in fiat and highly regulated, and the transition that moves towards blockchain, towards crypto and digital currencies, and working with regulators to get them comfortable in a local context where switching and bank communication is critical.
Great. Trevor, finally.
Thanks. Hi guys, my name is Trevor. I'm the CEO and founder of alphabloQ. And alphabloQ is a real-world asset tokenization platform. That's just a fancy way of saying that we bring assets like real estate, bonds, onto the blockchain and make them easily accessible for investment. So our goal is to create wealth for Africans and How we do that is reducing the entry barrier for investing in assets such as real estate. We know all the challenges we have with mortgage rates being really expensive, inflation rates being really high. Real estate just runs away from anyone's earning capacity, and this is not just an African problem, it's a global problem. Even in the US today, not many people are able to afford to buy a home. So our goal is actually to enable people to invest in this asset class, which is actually a foundational asset class for any economy. Real estate is the asset class that enables an economy to generate and store wealth. So this is how basically we reduce the entry barrier by breaking the value down of the asset into shares, which on the blockchain is known as tokens. And the difference between a token and a share is that you can do a lot more with a token compared to a share, which I'm sure we'll get into.
So thanks to the panel, and I think it sort of like sets the theme of the sort of like the three main things that are happening in the space, which is infrastructure, of course the money movement space with stablecoins and tokenization. And maybe Miriam, I could just begin with you because I spoke about stablecoins last. There's the cross-border payment space and cross-border transactions that are happening a lot between Africa and the world. We import a lot as a continent. Maybe you can speak a bit about what you're seeing in the space and sort of like the impact that stablecoins are beginning to have on the cross-border payment space and trade in general.
Yeah, absolutely. So if I take the case of remittances, obviously this is a very important part of the African ecosystem with over I believe last year Africa received about $54 billion in remittances, which is great. It's a very important market overall. However, when we look at the costs associated with these remittances, average people are paying about 8%, right? It's very clunky. It's delayed or it's expensive, and unfortunately, the cost is borne by those who can afford it the least, really. So if you take this example that we see regularly here in Africa, and you think about how stablecoins can transform that, I think that stablecoins are completely game-changing when it comes to improving the remittance corridors. Why? Because it's faster, cheaper, more effective, it's programmable, it's easily sort of, it's effective. It allows users as well to take their own financial destiny in their hands. So they can store USDC, they can store the value of USDC as a more stable currency, probably compared to some of the local currencies that we have here. So these are some of the benefits. Other use cases we see obviously is the typical B2B cross-border, which provides Africa with an open corridor to the rest of the world. It gives African businesses access to global markets, which inherently at the end will contribute to the development of the African economies in general.
Amazing. For you, Edward, I think you sit in a very interesting sort of like space, which is at the intersection of payments, stablecoins, and I would say a bit of the tech itself. So maybe you can speak a bit about, from your lenses, how you see the space continue to improve and continue to get shape, like how you see the industry evolving from where you sit.
So I think when we look at how this industry evolves, regulation is obviously a very important part to that. But more importantly, we need to be able to have interoperable systems. So I think the first thing we need to look at is standardization, right? And in addressing standardization, we're looking at being able to develop protocols, right, that allow for a more smooth interaction between different systems, right? And then when we come to the regulatory side, we need to see a close collaboration between regulators across various jurisdictions, and this is supposed to help with more compliant movement of funds, or should I say remittance across borders. And then on the technical side of things, we would see increasing use of APIs to ensure that the payment systems are interconnected, right, and are able to function seamlessly. Yeah.
Team, for you, congrats on Zone's recent partnership with NIBS in Nigeria. I think that's really, really amazing. Maybe you can speak a bit about what that looks like and what sort of like nuances that Zone is exploring just towards ensuring faster intra-payments with domestic payments, and from a global payment perspective, how you're also looking at exploring this.
Yeah, thanks. So I think from our side, I mean, fundamentally, and I think everyone on the panel would probably agree that what we're all aspiring to is payments that are frictionless, reliable, and when we get it right, universally interoperable. So from a Zone perspective, we're obviously starting locally. Very tight relationship with the Nigerian regulator in both the central bank and their affiliate NIBS. As you rightly pointed out, last week, 2 weeks ago, we announced a partnership with NIBS to try and create additional efficiency within the Nigerian market. So there's always an inefficiency in the legacy switching market where you have a centralized switch, it creates a point of failure, it creates an additional point of communication as far as the networks are concerned. And in Nigeria, we had another layer to that, which was all card transactions needed to be reported to the central bank through NIBS. They held a license called a PTSA, and what we've been able to do through the collaboration with NIBS is to bring that reporting obligation on chain. So instead of a bank having to report to the central switch and then also having to report to NIBS, in our case, they don't have to report to a central switch because there is no central switch. So there's a point of efficiency because the banks are communicating bidirectionally, bank to bank. No central intermediary, and we act as an observer and are able to report the relevant regulatory piece to the central bank. But what we've done with the collaboration with NIBS is to do the same. So the reporting obligation that any bank or fintech had to NIBS on the PTSA is now on chain. So the banks continue to communicate bidirectionally. We have an observer node for settlement, and NIBS has an observer node for the necessary information they have. So the efficiency means you've removed so many layers of potential failure, so two key points of potential failure, and 6 points of potential communication failure. So it is making it more efficient. And so we're really starting to we're starting to see the effect of that friction starting to end, and that's really our ambition.
Amazing. I think you're onto something, and quite excited to see what happens next. And for you, Trevor, we are Africans. We are generally a low-trust society when you think about it. I have to see you, know you, to do business with you. So I can imagine from where you sit, tokenization becomes a very interesting thing to sort of like begin to build that trust engine. And then potentially you could speak about some of those primary barriers that you're dealing with as you try and explore this. And B, I would also be very, very curious to hear how you are looking at the regulatory side of things because, again, it's a lot of market education, both of the regulator and the consumer.
Yeah, similar to what Tim was saying, points of failure. Real estate actually has the highest rate of disputes in Kenya. Actually, out of all the disputes in Kenya, real estate holds the highest percentage. It's actually 30% of all disputes in Kenya are real estate related. This is because the people who are in the transaction have information that the person further on in the transaction does not have and can take advantage of that. So those points of failure also lead to higher costs. You have to hire a lawyer, you have to hire an auditor, you have to hire someone to basically do a surveyor. Like all these different stages lead to different points that you need trust. So basically how blockchain solves that problem is, and ideally we do need to get the government to also be on the blockchain, for example with the lands registry. But once we do get to that point, like for example with NIBS in Nigeria, it means we can eliminate all those different points of where trust is required. And that also reduces the cost. So for example, to purchase real estate would probably cost you about 7 to 10% of the value of the asset. Could take you 3 to 6 months, if you're lucky, to actually finalize the transaction. But with us, what we do is we finalize all the due diligence, and once you log onto our platform, you can just click a button and buy or rather own an asset. The same thing can happen if you're selling it again in the secondary market. You just click a button and all of that is done. The ownership is changed. If there's a loan in it, the loan details are changed. You don't have to go to several different parties to make that change happen. So all these efficiencies are coming in, and the regulator is actually aware of this. And we were very, very happy to be actually Kenya's first blockchain investments platform that was regulated by the capital markets early this year. I would say that central bank is lagging behind, and anyone who's in the payments, lending space understands the value that we can provide, but I feel that they haven't really grasped what is happening with the decentralized networks, as Tim had well put it. But capital markets is really keen on deepening accessibility to the capital markets, and that's what alphabloQ does. And so we pitched that to them. We didn't really dig so deep on the technology, we dig deep on the value proposition. And that's how we were able to get their trust in allowing us to operate in the market.
Interesting. And for me, I think one of the most interesting spaces in one of the biggest challenges in the tokenization space is being able to build that liquidity where I can buy in the primary, sell in the secondary. How do you sort of like create that throughput that allows could be a potential speculator that sees this opportunity and decides to come in? How are you sort of like navigating that just to make sure that more investors or honestly more holders come into the space?
Yeah, I like the analogy when it comes to decentralized finance that it's a marketplace. You have a wallet, that wallet might have USDC. I have a wallet, my wallet has real estate tokens. My real estate tokens are worth $100,000, representing ownership rights in my apartment. You sitting in Ghana could simply click a button and invest in my asset that is in Nairobi without having to call a Kenyan lawyer, without having to go to a Kenyan bank, without having to go talk to the Kenyan Lands Registry. You sitting in South Africa can also participate in my asset, the same asset. So that opens up the market for this one asset that's worth $100,000, not to individuals who can afford $100,000 as on their own, $100,000 or in a single transaction, but you can sell that individual asset to the marketplace of different wallet holders that have different currencies that want to click a button and invest in my property. So it opens up the barriers to entry, really opens up the markets. In fact, it rubs out all the boundaries in terms of location and makes it accessible as if it was in your own jurisdiction, exactly. And you can imagine what that means for liquidity. So instead of you just marketing to a few Kenyans that have $100,000, you can market to the whole of Africa and to people who maybe you'd say have $1,000 or even $100. And that way all those people can participate in this asset class. Yeah.
All right, interesting. Speaking of Africa, Miriam, our currency is rapidly volatile in day to day. Same use case as happens in the crypto space with some of these coins when you think about it. Potentially for nascent novice user, maybe we can speak a bit about what really is stablecoins and what do stablecoins really represent in terms of being able to hold that value.
Yeah, I think Africa is probably one of the regions that suffers the most from currency fluctuations. And in the past, we've seen sort of users adopting crypto assets, which tend to be more volatile. Probably the simplest way to explain sort of stablecoins to users is that these are tokens that are backed, fully backed, and by reserves that are liquid, that are closest to cash or cash equivalent assets. What does that mean for the average user is that, especially when we're talking about the unbanked or underbanked, there are about 2 billion people that are underbanked around the world. 57% of them sit in Africa. So when you think about that type of user adopting digital assets together with potential programmable wallets, it removes the need for a banking system, right? So it gives them, again, that power to decide their future destiny in a way, whether they want to on board on the Web3 economy because they're launching a business, or they simply want to protect their wealth and use that as a store of value, right? So, and this is probably linked to the financial inclusion discussion that we talk about. When you look at probably business users, on the other hand, the way they look at sort of, you know, stable coins is it's a stable value that they can efficiently use across border, is borderless, is frictionless. It allows them not to deal with different currency fluctuations, with FX settlement risks, with delays. It helps businesses, African businesses, manage their cash flow better, helps them manage treasuries. Again, treasuries can sit in USDC rather than in multiple local currencies that are devaluating and probably absorbing the hyperinflation. And it just allows a much better way. It allows also these businesses to be competitive, again, globally. So.
For your team, I'm very, very curious because you seem to intersect a lot with both regulated entities and a lot with regulators in the kind of work that you do at Zone. And I'm very, very curious how you're addressing the three biggest challenges, which is AML, KYC, and any other regulatory requirements that might come out in the space. How are you talking to regulators in a sense?
Yeah, so it's interesting because you talk about stable coins, and I think in our world, because we started with regulatory in our DNA and knowing that we wanted to participate in the heavily regulated financial services within the market, we think very much more about CBDCs, central bank digital currencies, which in some countries will become a stable coin of sort. You know, will the US ever issue an e-dollar? I don't know. What will the regulation around it look like? Who knows? In Nigeria, we have an e-naira. So we tend to look at our e-naira and say, all right, this is great. This is a central bank currency. It's already regulated. It's already vetted by them. And so from that perspective, it's already compliant. How can we leverage that to do more of what it is that we intend to do? So real-time settlement. You know, not just real-time transactions like PIX or UPI in India, but actual settlement between the banks. Can you leverage a CBDC to do that? Because we live in the regulated space, the AML and KYC are taken care of because our customers are regulated entities themselves. So we only deal with regulated banks and fintechs, but that doesn't excuse us from pushing through a lot of AML and KYC activities ourselves. So we're not building it on chain, we're not building it ourselves, but we are leveraging third-party technology and, again, putting it onto the chain, either as smart contracts or as rules-based on our own chain. Because it's our own chain, we have a lot of flexibility as to how we develop that and ensure it complies. It will become far more important as we move beyond just a central bank digital currency into some form of tokenization, whether it's another stable coin, whether it's some form of gold-backed token, who knows. That side will become increasingly important because you're now participating in I don't want to say unregulated, but maybe a less regulated asset than a digital currency based on the country.
Great. I know we are running out of time, but Edward, SVB collapses in the US, the government steps in. One of the biggest sort of like challenges towards mass adoption of our world is the ability to do safe custody. And I don't know what are some of your thought processes about how we can sort of like improve that or sort of like create best practices around that?
Yeah, so now we're seeing an increasing focus on security and on regulation from crypto service providers and KYC as well. So one of the things that we need to do is enhance due diligence. So we're conducting identity verification and then monitoring transaction in order to detect any suspicious transactions and report that to the relevant authorities. Then in addition, I think we need to look into the custody, being able to develop custody solutions that pay attention to standards, the proper standards to ensure that customers' funds are safe, right? So I think that these are key ways. Then additionally, when it comes to relating back to the regulators, we need to ensure that there is a more close interaction to ensure that there is compliance, right? People are complying to the policies and the local guidelines, right, properly. So I think these are some of the ways we can avoid that kind of issue coming up again.
Yeah. I know we've run out of time, but in one word, maybe every person on the panel can tell me what they feel about the future of the Web3 world in Africa, starting with you, Edward.
Yeah, so first thing is widespread adoption, but this time in a more regulated way, right? And yeah, so then I see more integration with traditional financial institutions.
Miriam?
Widespread adoption as well, focusing on the Bank India and banked mobile money networks. Half of the mobile money activities is happening here. And regulation. I think clearer regulation.
Yeah. Tim?
For me, it's efficiency. I just think there's so much inefficiency in the markets that blockchain and the crypto world can actually simplify.
Absolutely. Trevor?
For me, it's global equity. Everyone will have an equal chance to build wealth as anyone else, and it's going to happen extremely fast.
It's unfortunate that we didn't have 5 hours to talk. We had a lot to say, but very much thanks to the audience and the panelists. I don't think we have space for any questions, but we are all here at the panel, everyone here. So if you have any questions or want to chat, please find us outside here or around, and many thanks for that.